Hello and welcome. You're watching Business Today TV. This is Market Today and I'm Sakshi Batra, a show where we'll help you understand the latest cues on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing in trade today. What we'll also focus on is the upcoming festive season and where should you be investing ahead of the festive spirits which are already high in the air. Now, we'll discuss all of this with an expert as well. But first up, let me just tell you where are the benchmarks and the sectoral indices really trading as we touch a halfway mark through this trading session. 19,650, that's the level at which the Nifty is trading at, flattish with a negative bias, 0.07% of a downtick. The Nifty Bank 0.5% lower, so that's where the pressure is building up from. 44,383 currently. The Sensex is down by about 77 odd levels. They're off the lowest point of the day, but still subdued at this point on the benchmark index level. Let's get down into the details on the sectoral action underway. Like I said, the Nifty Bank is where the pressure is creating from. So you can see the private banks and the financial services and even the PSU banks down in trade today. Apart from this, we're also seeing metal index, consumer durables, oil and gas, autos also slipping away into the red zone. Oil and gas space also by 0.2% of a decline can be seen. But what on the contrary is doing better today? It's the healthcare names. The healthcare sector is one of the top gainers today. You're also seeing the broader markets, the small and the mid-cap sectors up by almost 0.5%, 0.7% of gains being seen here. The FMCG pack, that's also building up some kind of gains. 0.4% of a gain can be seen here. The Nifty IT space, the realty space is also picking up pace. PSU banks are recovering right now. On the Nifty 50, you do see stocks like Cipla, like Sun Pharma, Dr. Reddy's, Divi's Laboratories as among the top gainers. You also have Coal India that's coming back after yesterday's sharp move in the energy basket. You also have L&T, LTI Mindtree, these kind of stocks picking up pace as well. Like I said, FMCG, so you do have HUL, yes, and ITC also picking up pace. Yesterday it was Nestle and Britannia, so you're seeing a lot of action coming back into the FMCG names. From the auto baskets, it's Maruti Suzuki that's again up at 10,605 odd levels, 0.5% of gains coming in on this one too. Let's welcome our guest on the show. Mr. Avinash Gorakshakar joins in. He's the Director Research at Profit Mart Securities. Welcome, Avinash, and thank you so much for taking the time out. Well, the festive season is clearly upon us, and the markets on at least the benchmark index level have started to give us some kind of discounts. We are up, down about 2 or 3 odd percent from the highs that we had touched in the early part of this month. But if the markets were to correct a little bit more from here, I want to ask you, what all will you be really adding to your own shopping cart this time around? So first up, your view on the markets, and then we will get down into the details of what to add and what to subtract. Till the value or till the year end, what is your own sense of where do you see the Nifty at?
Good afternoon, Sakshi. I think clearly, markets have seen a kind of significant amount of correction, largely because of one reason, and that is primarily because of a lot of FI liquidity on the sell side coming in the market. FIs are constantly sellers, largely because they are now following the currency factor, the rupee being weak, the dollar getting appreciated. So fresh inflows in the markets are not coming in easily. And I think there are significant, headwinds as far as inflation numbers are concerned. The September 23 RBI policy is going to be eagerly awaited as to what would be the commentary from the governor. My sense is that 19,000 is a very crucial level. Clearly, I think this is a very strong support level, and I don't think the markets would go below, say, 19,200 or 300 odd levels. I think there is going to be some value buying which is going to come in. Most importantly, from a near-term perspective, I think now easy money making is gone for the investors. Now I think investors will have to wait and will have to stay invested longer in good companies to get a decent upside. And broadly, the sectors which we like and we've been telling our clients is basically domestic facing sectors. We still believe the globally faced sectors like IT, or for that reason, typically metals are sectors which should be avoided. But on the other hand, domestic themes like automotives, auto components, capital goods, real estate, building products, cement, these are sectors which I think one could definitely look at, from the next 6 to 12 months. And I think broadly, my sense is that, although I'm not a technical expert, my sense is I think probably, 20,000 is one level which I think the market needs to conquer now initially. Only after that we could possibly see higher levels. But yes, the next 6 months are going to be very volatile because elections are something the markets don't like. A lot of uncertainty and volatility could be seen in the next 6 months, for the market.
Okay. Now, a lot of pre-festive themes are already in the works. Autos are buzzing these days. Consumer durables are coming back in flavor. We are seeing the jewelry stocks also, rally as well. We are seeing retail, sugar space getting into the sweet spot. So, a lot to discuss right there. And your top stocks from each of these sectors, we'll pick them up one by one. But first, tell me, is it a good idea to build up positions ahead of the festive season in this entire theme that starts to, play out in this entire 2 or 3 month scenario?
Yeah, I think see, typically my sense is that you'll see a lot of strong performances from automobile companies, record sales from the auto majors. Clearly, the FMCG companies are also buzzing. I think there's a lot of expectation that rural demand is slowly inching up, consumption is increasing. So you're going to see a lot of consumption themes as well as the FMCG basket name doing well. So I think investors who have a little strong investment appetite and can stay invested for a slightly longer period of time, Sakshi, should definitely decide to pick quality stocks as of now, because the markets always gives you good opportunities in these kind of weak markets. I think one thing which investors should remember is that good companies and good prices don't come together. You always
Hmm.
have this problem in a bull. In a weak market, I think you get good quality companies at good valuations. So I think yes, some cherry picking needs to be done, but yes, keeping a time frame which is slightly medium to long term.
Okay, so let's pick out all of these themes one by one. You did talk about autos, record sales right there ahead of the festive season. But, which way would you tilt now? We're seeing Maruti Suzuki already hover near record high levels. Brokerage houses are giving targets of 12,000, 12,500 odd levels. We're again seeing momentum build up in the two-wheeler names like Eicher Motors, Bajaj and Hero and the like. Which ways would you tilt when it comes to the auto names, and which one would be your top, stock pick from here?
No, I think, see, I think as I mentioned to you that to play the automotive theme, you can look at the auto component theme. I think if autos grow in the OEM and the replacement market, then obviously companies which are associated with the top majors like Maruti or Tata Motors or Ashok Leyland would benefit. And there are few companies like, Amara Raja Batteries, which is a leading battery manufacturer in the OEM and the replacement market. See, what is interesting about this company is that it's an oligopoly market, only two players in the market, and this company has been showing remarkable growth. Last year, revenue was more than 10,000 crores. The profit after tax was 690 crores. It's a debt-free business, has large OEM accounts, has a very large replacement market share. And apart from the auto sector, they cater to the data center business, the railway business. I would believe that the valuations look very interesting. Around 10 to 12 times, is the kind of 1 year forward multiple. And if you have a very strong growth from the automotive sector, especially the passenger car, the two-wheeler, the tractor sector, where Amara Raja has got a very large market share, I would believe that this is a decent kind of a stock to play with, because the risk reward is in your favor, and I think the upside opportunity is quite significant considering the kind of volume growth we are going to see in the automotive sector. The other
Hmm.
companies, Sakshi, would be something like Sundaram Fasteners. Now, Sundaram Fasteners
Yeah.
is a engine component supplier. Obviously, what goes in the powertrain is something which is very important. They have customers across the commercial vehicles, passenger cars segment, which are very large segments. So I think here also Sundaram Fasteners also looks pretty interesting. So I would believe that somebody who wants to cherry pick as of now could look at these kind of stocks, because these are fundamentally very solid companies and where the risk reward could be quite significant over the next say 6 to 12 months.
Okay, Amara Raja Batteries, Sundaram Fasteners, the clear picks from the auto ancillary basket that investors can play out in. From the consumer durable basket as well, which ones would be your top picks? We do see a lot of these white goods get off the shelf during the festive season sales. So, do you like stocks like Blue Star or a Voltas or a V-Guard, maybe Havells, Polycab? Anything that strikes you at this point?
Now, I think within the consumer durable basket, especially companies like V-Guard, Sakshi look pretty interesting, because they not only have a very large presence in the southern market, but even a very large market in the northern and western side of the markets. And I think this company has been beaten down very badly. It's a very strong brand franchise, and typically the festive months give a lot of fillip to their sales. So I would not be surprised that you could see a significant run up into these kind of companies. Plus, you could also look at companies like Havels. Havels has also been battered down. I think a very strong product portfolio, both in the air conditioning as well as on the refrigerator kind of segment. So here
Hmm.
also, I think it's a debt-free business. Again, volumes are expected to pick up during the festival months. So Havels as well as V-Guard, and to a large extent, companies like even Voltas, because Voltas has been a large market player in the AC segment, specifically the industrial segment. So here also growth will come in, but yes, I think you'll have to pitch in for a slightly longer time frame, because these are all popular stocks where prices have risen already. So I think maybe for the next 6 to 12 months you'll have to keep a time frame here.
Okay. The next space that obviously gets a lot of attention outside of the stock markets also is the gems and the jewelry space. In India, a lot of people go ahead and shop for a lot of gold and jewelry at this point in time. But do these stocks come back into flavor as well during the festive season? Stocks like Titan, maybe even Kalyan Jewelers or Senco Gold. In fact, this is one of the recently listed stocks. In the last 2 weeks or so, it's already jumped up about 45-47% off. It's already at a record high level. Do you think it's a better play instead of going gold shopping, go for the stocks that own these gold?
Now, I think, see, my guess is that all these companies which you mentioned, Titan, Senco, Gold, obviously festive ones, and you'll see a very strong quarter. And plus, demand is quite sustainable. I think it's not only the festive quarter, but I think over the next 6 to 12 months, my sense is gold prices have been quite, reasonable. And you'll see a lot of festive buying plus regular buying coming in here. In fact, actually, there was a recent IPO. I believe you must be aware, that is Manoj Vaibhav. Now, this is also a very interesting company, a very large company, and a very reasonable valuation offered. So, obviously, markets are going to look at such kind of stocks also. Wherever the
Hmm.
valuation comfort is there, and I think the earnings growth trajectory is pretty solid, I would believe the markets are definitely going to give a thumbs up to these smaller names also. Of course, Titan would definitely be a major beneficiary, but
Sure.
I think in terms of the risk reward, markets will always look at better choices where the risk reward is better in terms of the positioning of the price.
Okay, let's now get down to the retail space. A lot of people go out there shopping for clothes, and therefore the attention on a lot of retail names as well. We're seeing a lot of news flow happening around Aditya Birla Fashion, so that stock is in flavor. Trent is being preferred by a lot of analysts in their PMS basket as well at a record high. Gokul Das Exports in the last 2 months, the kind of move that it has shown as well. Anything from the retail basket that interests you?
No, I think from a valuation perspective, AB Capital, AB Fashions looks pretty interesting at around 250, 216 rupees. Then I think Trent also looks pretty solid. Shoppers Stop is also another company where I believe Sakshi will benefit. And I think,
Mm-hmm.
from the mass market also, despite the fact that, I think DMart doesn't come clearly as a fashion house,
Yeah,
but
yeah,
clearly from retail perspective, I think DMart cannot be ignored, because I think
sure.
typically festive season is a time where people, of course, apart from garments, they also buy a variety of other goods and services. So I think here
Yes.
also, I think one should keep a watch. I would not be surprised that the September quarter and then the December quarter should be very strong, considering the kind of retail consumption which is expected over the next, say, couple of quarters.
Okay, so that's as far as retail space is concerned. And the other space which is in a sweet spot right now is clearly sugar. I mean, in FY24 alone, if we see a lot of these smaller sugar names like Triveni Sugar, Sri Renuka, and the likes, they've actually given returns of up to 110% odd already. And even today, Balrampur Chini, Sri Renuka, they're all Dhampur Sugar, they're all coming back into flavor. What do you have to say about these sugar stocks if somebody really wants to buy ahead of the festive season? Is this a good entry point?
No, I think sugar companies definitely should do well, considering that global sugar prices have started rising. Secondly, ethanol prices have also started rising. See, I think one thing is very clear, that rising crude prices is definitely good for ethanol players, and I think sugar companies have that added advantage. So I think companies like Balrampur Chini, Dhampur Sugar, Triveni Engineering, I think these are well-established companies which have got integrated facilities to make ethanol. And with ethanol prices also rising, and the government also focusing on a higher blending ratio of almost 20% by FY26, you're going to see a lot of action here. My sense is that the September quarter will be good, and even in the current year, that is the current sugar season, if the sugar prices continue to remain elevated, then I think that is going to add a further boost to their earnings. So I think two, three companies which we like are Balrampur, Dhampur Sugar, and obviously Triveni Engineering, which have got large sugar as well as ethanol capacity. So I think investors should look at this basket and definitely look at adding them in their portfolios.
Okay, understood. Anything else that strikes you ahead of the festive season? Where would you be bullish on? Any particular top stock ideas that you've generated up until Diwali?
See, I think real estate is one space, Sakshi, where I think the demand continues to be rock solid. And I think despite the fear of rising interest rates, inventory sales all across India, especially in markets like Bombay, Northern India, have been doing very well. So I think larger names like DLF, should do well. I think they have been very successful in launching both, middle as well as the luxury kind of launches. More importantly, smaller players like Anantraj, which is based in Gurgaon, I think has a very strong positioning in terms of a strong land bank in Gurgaon, and plus, getting into the data center business. And plus, I think Mumbai-based players like Oberoi Realty, I think one could definitely look at such kind of quality players where the market prices are quite strong. And I think the order book visibility is also pretty solid. So I think real estate should not be ignored. This weak market, if it provides a good entry point, that would definitely add a lot of alpha to the investors' portfolio.
All right, understood that. Well, many thanks, Mr. Gorak Shakar, for being with us on this edition and sharing with us all these wonderful insights with all our viewers right ahead of the festive season. In case you're also, as an investor, getting ready to shop a lot of stocks have been discussed from various themes that could be flying away ahead of the festive season. So get your shopping carts ready and add on to all of these names as well. However, do speak to your own financial advisor before investing in any of the stocks that have been discussed on this edition. Many thanks for tuning in to us onto this special. But do stay tuned, as a lot of news from the world of business and stock markets follows up next on your screens.
What looks good at this point in time is Federal Bank. The stock has been showing extremely good relative strength. In fact, last three trading sessions, this has formed higher high